Hi, everyone. My name is Paul Westsells. I'm the president and CEO of Western Copper and Gold. For those of you that are not aware, Western Copper and Gold is a company that's on both the TSX and the NYSE American under the ticker WRN. We are developing the Casino Copper Gold project. This is a large copper gold project located up in the Yukon in Canada, 21 million ounces of gold, 11 billion pounds of copper. This past year has been really exciting year for us. We brought on Rio Tinto as a major strategic partner in May of this year. We issued a PEA on the project in June of this year. Just came out with some new drill results last week, so lots to talk about. And I'm very happy to be here with Merlin.
Well, good to have you on board. Thank you very much for the introduction. As you say, yeah, it's been a really busy year. PEA, Rio Tinto strategic partner, and these drill results. It's the drill results, as I understand it, are from the inside of the deposit. Can you just give a quick background on what was the motivation behind this most recent round of drilling?
Yeah, it's sort of interesting. So, I mean, as part of our investor rights agreement with Rio Tinto, so we signed this, just in a nutshell, I'll give you the 1-minute overview of the deal with Rio Tinto. So they came in May, signed an investor rights agreement as part of a private placement of $25.6 million in the company. So, but the investor rights agreement, really, it talks about doing a scope of work. And part of that scope of work was a drill program. And so what we have here are the results from, let's say, the first half. And like most companies, we're all waiting for exploration results. So this is the first 9 holes. And what's interesting from a couple of point of views, and I'll get into the actual results, but I think of interest for everyone is where we're drilling. And so what Rio Tinto was very, very interested in, and knowing the deposit, I'm not surprised by this, is what we're calling our core of our deposit. So a layman's way to think of our deposit is that it has this core. So this is a 800 meter by 500 meter area, sort of cylinder, if you like, in the middle of the deposit. It runs sort of 200 to 300 million tons, runs about 0.7 copper equivalent. That is quite a bit higher grade than the rest of the deposit. That's where mining starts. If you look at our PEA, you see those grades come out over the initial few years and quite a bit higher grade. And then that's surrounded by lower grade. But all of this initial drilling, pretty much all of these 9 holes are right in that deposit core.
Okay, interesting. So just let's stick with the kind of the overview of the deposit, because as I can, you've got this pit shell here, and you've got a cap of gold-rich, copper-depleted material. So that the plan is to put that upper portion into a heap leach, and then to take out the copper richer material below it. It's all quite low grade, isn't it? I mean, what's the global grade? And really, what you're essentially telling me is that the focus is now on that starter 230 million tons in the center.
Yeah, I mean, sure. If you look at new resource last year, the grade in the measured and indicated was 0.36 copper equivalent. It sounds fairly low grade. So, but this is why it's always important, to point out how this is mined, the importance of the core. The part of the reason that grade is low is that this is an enormous deposit. So you really have to sort of think of this as unwrapping the onion a little bit. So you start with the core. And as I said, the core runs around point. So a way to look at this is our PEA in the first 4 years of mining. The first 4 years of mining, the grade is 0.72 copper equivalent. That's what goes to the mill. That's not low grade at all. For a big project like this, that's very, very good grade. Then the first billion tons runs around 0.5. And then the next billion tons runs sort of down to that 0.4. So, I mean, sure, you average it all out, and it's a low grade deposit, but it starts high grade, and then the grade drops as we sort of move through. So, but yeah, I mean,
hang on. I mean, I love it. I love these big numbers. So in the PEA, can you just headline some of the numbers for me? How much is in the mine plan? I mean, you're mentioning billions of tons, so it must be over 2 billion tons.
Yeah, yeah. So the mine plan itself, what we looked at is we looked at a two-phase development of the project, and part of the reason of that two-phase development was related to the fact that the tailings facility that, anyhow, that's a story in and of itself. But we spent a lot of time working with the community and the First Nations, coming up with a agreed upon plan for the tailings facility. That tailings facility only holds about 1.1 billion tons of material. So that's phase one. That's 25 years. So that first 25 years runs a little under 0.5 copper equivalent in terms of the average grade fed to the mill over that period. We then talked about a phase two, and the phase two contemplates a second tailings facility that it brings the mine life up to 47 years. That adds, roughly another billion tons onto the overall mine plan.
Okay, so this is a hugely long life asset. What's the capex for phase one?
So capex is 3.25 billion Canadian, which is 2.6 billion US. So, in line with what you would sort of expect for a project of this scale. And one thing I haven't talked about, of course, is the headline numbers on this PEA. I mean, the PEA at $3.35 copper and $1,600 gold has an IRR of 19.5% and a net present value of 2.3 billion.
At what discount rate?
At an 8% discount rate.
Oh, really? 8%.
Yes.
So what was the NPV figure? 8?
2.3 billion. And again, that's at that 335 copper. You put in spot, and you're up to about 26% IRR. And you add $1 billion to the net present value, you're up to sort of actually closer to 3.5 billion at spot values right now.
Interesting, because how do you think large companies like Rio Tinto look at long life assets? Because when you're doing a discounted cash flow analysis of any project, the years, once you go past 10 years or 12 years, the contribution for your annual cash flows is relatively meaningless. So, I mean, how do you look at it in a kind of a financial modeling perspective?
Well, I mean, from our point of view, I mean, that's why when I talk about the project, I talk about it as phase one and phase two. And I only talk about IRRs and net present values from phase one, because as you said, phase two, it's the same IRR net present value, because year 26 to year 47 on a discounted cash flow basis just doesn't really add anything. But what it adds is cash flow, right? So you're now talking, I mean, you add another $4 or $5 billion of cash flow. And so, you're a large company, and I mean, and then keep in mind at that point, your capital is sunk. So that is just cash flow. And copper production and gold production and moly production looking into the future. So, I mean, the one thing I would say, you're just back to the first part of your question, you were asking, what do big companies look at? I think size does count, right? I mean, it needs to sort of be meaningful. I mean, I look at something like our project located up in the Yukon, and a company like Rio Tinto, who's got actually has a lot of experience in Canada, in the north with the diamond mines, in Canada in general with the Alcan acquisition. They get Casino up and running. They've got 75 years of production, economic production, and they don't have all the country risk. I mean, and I'm not going to name names, but certainly there's a few of their projects where they spend a lot of time talking to presidents of countries and things like that, whereas this will just be like, build it, run it, be a good community corporate citizen, and it'll be easy for them to do. So, but you need to have some size, and it needs to be economic.
In phase one, what would the annual copper production be and the annual gold production be?
Yeah, so I mean, again, because it starts off so high initially and then sort of drops down, a way to look at this is on the gold. It actually starts, fairly close to 400,000 ounces of gold per year, and then that drops down to sort of 260. On the copper, it sort of averages about 80 to 90 thousand tons. of copper produced per year. Yeah.
Okay, and that 400,000 ounces of gold production, that's from a heap leach, and you've done all of the.
That's from both. That's from both
Okay.
contributing that initial
Okay.
period. Yeah.
Okay, so you strip off the upper portion, which goes to a heap leach, and then once you're into the lower portion, which is combined copper gold, and then you're getting some gold out in concentrate or in the copper con. Is that right?
Yeah, the heap leach throws off around 80,000 ounces of gold. So the concentrate and the gold contribution to the concentrate is significant. Yeah, so geologically, the surface material it's less that it's enriched in gold, and it's more that it's depleted in copper, right? I mean, the gold grade goes up a little bit, but really the gold grade is fairly consistent through the deposit. Again, concentrated in that core, and then lower outside of that core. But then you have that supergene process, which brings that higher grade copper as a supergene blanket. And then above that, you have this depleted cap that goes onto a gold heap leach.
And when you talk about the core, is there a kind of a lateral extent to high grade copper as the supergene has kind of spread it, or is it quite spatially constrained?
Yeah, so I mean, talking a little bit of geology, and as I said earlier, I'm not a geologist. I'm always nervous about getting into geology. But so the core itself is a breccia. Okay, so that's a brecciated area, and that's where the higher grade is. So you have that higher grade core as a breccia, and then you have that supergene process. So you actually it's almost like a T in terms of the higher grade. You've got that core, and then you've got that supergene blanket. But you can imagine that, and a lot of this stuff daylights right out at surface. So, I mean, one of the drill holes that we announced last week was, 65.8, close to 66 meters of 2.53% copper equivalent. And that was from 10 meters. This is right at the surface. And that's, I think, a very important thing to consider. And this is one of the things geologically that separates our deposit from a number. I mean, these sort of lower grade copper deposits, particularly in this part of the world, call it northern British Columbia. We're up in the Yukon, but somewhat the same system. I wouldn't say they're common, but there's a number of them. The difference with this one is this higher grade. That's that core. You also have that supergene. And the other thing is it's at surface. Very, very different. And as you're well aware, it means you start mining that initially. It means you get that higher cash flow initially. Payback makes it add up as a good project.
Completely get that. That makes perfect sense. What every big project needs is a high grade starter zone to pay off the capital, because once you've sunk your capital, then you're into cash flow, as you mentioned earlier. What other aspects of the Rio Tinto deal were in the small print? And you've got your PEA now, which is, I always think of a PEA as what it might be, and that then the next stage of study, which is the pre-feasibility study, presumably, is always it's really where the greatest amount of options get studied. The option, you look at the largest number of options in terms of the output of your pre-feasibility study should be what this deposit should be in terms of its development options. And then, of course, the feasibility study is what it will be once you've chosen your optimum route, and then you've gone down that particular path to get the quotes in and get everything fine-tuned. So you've got your PEA, you've got what it might be. How are you tackling the conversation around what it should be in terms of its scale, in terms of the way it's structured, in the terms of the relationship with Rio Tinto, and coming back to the start of my waffle, which was what's the small print in the deal with Rio Tinto?
Yeah, sure. And so I'll sort of answer that in reverse a little bit here. So we have rolled on immediately after the PEA into actually a feasibility study. And the feasibility study, so just going back even prior to the PEA, we've had this project for about 12 years. So we've done a whole bunch of engineering on it, including, a historical feasibility study from 2013. We did, 2 pre-feasibility studies before that. So we've got and if you look at our company, we're actually more of a company of engineers than of geologists. I mean, when we inherited this deposit, it was fairly well defined. We've certainly expanded it considerably, but we're really more of a team of engineers. So on an engineering perspective, we feel like it's pretty close to optimized. And that's what we've reflected in that first phase of the PEA. And so that is, this large mill operation. The total size of this is 3.6 billion tons. So you sort of got to go big. And, we're starting off at 120,000 tons a day. My guess is that by the time the last tons are put through the mill at this operation, that you're probably twice that size. Because again, at that, for 3.6 billion tons, that's 75 years. So even the PEA didn't look at all of the ore that we've identified.
So can I just interrupt? So if you've done all these engineering studies and you've got so much information on it, was the reason it was only a PEA? I say only because there were inferred resources in the mine plan.
It's a very good question. So we did the PEA for, the key reason we did the PEA is because we wanted to look at that second phase so phase one, so that first 25 years only looked at measured and indicated. That second phase did look at inferred, but the idea of the PEA was to sort of get something into the market, because I'd always talked about this project is say, look, this is a 50-year project, but you're not going to drill off the 50 years if you have the first 25 years drilled off. So the only way that we could present that was through a PEA. So we got the PEA out, we got it out quite quickly. And then we essentially used that to roll right into a feasibility study. And the feasibility study, again, is focusing on that first 25 years. And the feasibility study,
Sorry,
thought on that. Yeah,
go on.
Okay, no, I was going to say, the idea of the feasibility study is that then rolls into permitting, because we need to get the engineering to that level to permit it, right?
Okay, so just if I get my head around it, you had a pretty good understanding of the phase one. Then you didn't feel the market was kind of giving you enough love for the project. So you went to you did a PEA to show that this thing actually runs for 50 years.
Yeah.
But then now you're coming back to do the feasibility on phase one.
Yeah. So there's a couple of ways to do it. I mean, when we looked at it, we sort of said, starting with the end in mind. The end in mind was an updated feasibility study. So we took a look at that and we said, okay, that's going to take a year and a half. And we said, we would really like to sort of spell out what this, 2-phase 50-year mine life looks like. So there's two ways to do that. One is you have a feasibility study with the option 2. The other way is you knock out a quick PEA and then you roll from that into your feasibility study. And so we decided to go with that second option. It's actually not a bad way. I mean, if you look at sort of engineering 101 and how you should develop these things, you should start with a simple study and then add a level of engineering, hence the PEA, pre-fees, fees, rather than jumping right to a fees. It was also, we're talking about a project that was 8 years old. So the PEA allowed us to gut check everything, make sure that, costs were in line with what we thought that they were, previously, all of those sort of things as well. So, like I said, the primary reason was to get in that second phase, but it was also get something in the market quick, gut check, an 8-year-old study. I mean, this is pretty old. So there's sort of considerations that sort of, weighed the tables towards us knocking out a PEA and then the feasibility study.
Great. And so how long is it going to take to get your feasibility study done, and what's it going to cost? And is that covered by the 25 million that Rio Tinto contributed?
Yeah, so the feasibility study is underway. It's scheduled to be complete in Q2 next year. The total cost of the feasibility study is about $3 million. So a lot of the work is done, the met work. With the PEA, we have some of this sort of engineering that's done. A lot of work, as I said, on this tailings facility was a key thing. So a lot of that work is done. It's just, the detailed engineering that goes into a feasibility study that is really left. But I'd like to come back to the first part of your waffle, as you called it, with the with the fine print on the Rio Tinto. I mean, there's lots of fine print I can get into, standstills and all sorts of fun things like that. But I'll go back to really where they're coming from, because I think that I'm surprised because I have been saying this for a while, but I talk to investors and they don't quite get it. Rio is so let's start with what they're very interested in. They're very interested in the resource, in the core of the resource. We've just seen this with this drilling program. They're very interested in the metallurgy, where we've actually now kicked off a metallurgical program. We're doing a bunch of work on that. They're interested in geotechnical. They're interested in the First Nation community relations, those sort of things. They're not particularly, they're interested, but they're not involved that much on the feasibility work or on the PEA work. They're really, their big company approach on this is, we want to make sure the resource is exactly what we think it is. We want to make sure the metallurgy is exactly what we think it is. We want to make sure that the community, First Nation, government, regulatory environment, and the way that the project is viewed in the community is the way we think it is. And then we'll go and do what we want to do with it, not what Western Copper wants to do with it.
You're essentially, I've seen this time and time again, is that the big companies want the data, they want the raw data collected in the way that they can trust and they can feel comfortable with, so that when it comes to it, they can interpret it in the way that they want to, without going through the filter of the smaller company, perhaps.
Yeah, that is exactly, actually, that's very, very well said, because that's exactly, so we actually just had a board meeting last week. One of the things that came back was, well, what is your drill cost? And how does it compare to last year? Well, last year we did the drilling on our own. Our drill cost is double. So it's not, there's some technical reasons. We did some PQ core, which is a very large diameter core, very, very slow, very expensive. But it's more related to the fact that we use this Intersoft core scanning for every single meter of core. We did XRD on a number of core. We did it was just much more expensive. We still ran it, but the analytical costs, the logging costs, and everything that wanted to be recorded was just that order of magnitude higher, because Rio really wanted to sort of make sure that they really understood it, had it well logged, all the sort of fine details that their team of geologists that they have on this project are looking at. And the good news is that we've got half the drill results back, but actually the drill results that we do have back are the ones that were specific on delineating the resource, and were specific on finding some of the metallurgy. They're very happy with the results. We've been through them. They completely confirm what we understand in terms of the grades, in terms of the contacts between this high grade core and the lower grade sort of country rock, how that all sort of comes together. We've sat down, we've had that sort of initial meeting with them. And yeah, so far so good. So and
in some ways, remind me, you've done 9, you did 18 holes, you've got 9 back. How many meters was that in total?
Oh gosh, the total meters, yes. There was about 5,000 of exploration. The total, I should have it off the top of my head, but I don't. It's all sort of cut up differently, but it's sort of between 5 and 10. Yeah.
Okay, well, but whatever it is, and sorry for putting you on the spot on a kind of a tiny detail in the whole.
Paying attention to grades.
Yeah. But what I was going to say was that, relative to the probably hundreds of thousands of meters of drilling, this is a relatively small program, and what someone like Rio Tinto will do by getting you to do every single and use every single analytical tool on that relatively small program, it will, in their mind, it will help them calibrate the quality of the data set for the wider, for the bigger project. So I can completely understand why they would want that, throw the kitchen sink at the analytical, at the scanning, doing every single analysis possible on it.
Yeah, and so keep in mind, that's all the fresh core. We also scanned with this Intersoft, and it's quite an impressive scanning system. We scanned 50,000 meters of historical core.
Oh wow! Okay.
Yeah, so that's another part of the program as well. So exactly fitting into your thesis, it's like, yeah, we're going to have every centimeter of core highly analyzed at the Rio Tinto standard. we'll develop our model, we'll develop our engineering plan, and move forward. And just back to the fine print on the program that we have with them. I'll remind everyone that we have this agreement to work with them. We've got a technical committee. We second people. They can second people in, a number of things like that. It's in place for 18 months. The idea is we do the field program, done. We do a MET program, which is underway now. And then we sit down and talk about what the next step is. And the next step isn't Rio Tinto being an 8% shareholder. The next step is them being probably owning the project. So that's pretty darn close. I mean, a MET program doesn't take that long.
Yeah, when I look at the share price, you had this great run up to the middle of the middle of the year, and then the ski slope back down, the black run back down. It almost made me think that perhaps the market was expecting them to come in with a kind of swinging with a bid, early on, but that's not really their style. Or maybe the copper market was hot. But
yeah, I mean, I look at that and I scratch my head as well, because I mean, on the inside here, we have 2, 3, 4 meetings a week with Rio on technical basis, and it's all everyone patting everyone on the back and talking about how great it is, and we've got these great drill results, and things are going well on all these things, and we're sort of talking, well, we're going to be sitting down, as we sort of talked about, when we sort of have the data package more or less complete, right? And why would we sit down before that? The data package needs to be more or less complete. That's going to be sort of related to this MET program. The MET program's underway. Yeah, I mean, it sort of seems like a simple investment thesis from my point of view, but anyhow.
But I think the elephant in the room is the Capex. We haven't spoken about it, and Rio Tinto can afford it. It's much harder for a junior company to do that. The cost of capital for a junior is a lot higher than it is for a major or a super major like Rio. And they, in some ways, have got all the time in the world. That's whereas the junior companies, the Western coppers and golds of this world, operate in a different timeline. So I wonder what your thoughts are about kind of some of those observations.
Yeah, I mean, so with that in mind, so one of the deals that I looked at quite closely was BHP and SolGold, right? So it's similar. So you've got a super major with BHP investing in, and we're a similar size to Cascabel, SolGold's project in Ecuador. Of course, that's Ecuador, and we're in the Yukon. And I looked at that, and we'll see where that ends up. I mean, I'm not saying it won't end up someplace positive, but I was just like, BHP is there forever, and they get to dictate technical terms forever. And so when we sat down with Rio, we said, like, how long is it going to take you to do this? And it was like, well, it should take us a little bit less than a year. And I was like, okay, let's sever the agreement in a year. And then it was like, well, okay, let's make it 18 months because we've got to negotiate. Now there's if we are in the middle of negotiations, they can extend it by 1 year. But the idea here is that if we don't come up with some sort of deal, then it all collapses and they become an 8% shareholder. And what does that do? That does nothing. That's just an annoyance to them. They don't have any rights. They don't have any technical rights. They don't have anything like that. So it sort of puts us all to, forces us all to work together. And I mean, the other thing I would say, and you got to be careful, certainly, but, we sat down and we talked with Rio from the day one, and day one was, look, we've been developing this for 12 years. As you said, the capital cost is very high. It's going to be a challenge for us to bring it forward. We feel like this belongs in a super major. And they said, yeah, we like the project. We're certainly entertain the option to potentially look to buy it here in the future, but we need to do some more work. So that's been the conversation. There's good trust, there's a good working relationship. I can't put that into a press release, but that's an important part of where we're at and how we're moving forward. I mean, what you can see is that there isn't a bunch of, fights at the board level or anything like that going on.
No comment.
No comment. Yeah, it's been going very, very well, and I think that sort of it again. It just speaks to a good relationship that we have with them. We're getting good results. They're happy with the results. We're happy with the results. Things look pretty positive here in terms of moving forward. And then back to the capital cost. I mean, I completely agree. I mean, we've always said that this project moves forward. There are ways to fund this on our own, and they're challenging. They're large streams. They're things like that. We've always said that this is best done either in the hands of a super major completely, or with a company like that involved. And so that we're working with Rio, but certainly in the background, that's the other thing we're working on. The other thing I would say is that we are in a very nice cash position. We're going to end the year around $50 million cash in the bank. In terms of what we need to do, as I said, the feasibility study is around $3 million. Permitting is going to run probably, by the time it's all said and done, $20 or $30 million. We've got some G&A on top of that as well, but we're pretty well positioned here for, to get this project shovel ready. What does that mean? Full feasibility study and completely permitted.
My next question was going to be on permitting. And I really was going to be asking a question about timelines, but you put out a number which surprises me in terms of the cost of permitting, $20 to $30 million in permitting.
Mm-hmm. Surprised you because it's so cheap or so expensive? Depends who I'm talking to. It's sort of like the capital cost. I mean, for a large copper project, I mean, Quellaveco is being built right now. It's like $5 billion, right? US, double what Casino is. So, yeah.
But where does the expenditure go on the permitting? What are the expensive components?
Yeah, so I mean, I would say that more than half of that is putting together. I mean, they all have special names, but let's call it the EA application as a generic term. And so there's quite a bit of there's more field work than you would imagine. I mean, so you've got to send people in and water sample all over the place, and these are in remote areas, so you've got to helicopter people around. You've got to do various surveys of wildlife, lots of engineering, lots of water balance modeling. An EA application is like 4 feasibility studies in terms of feet of paper. I mean, they're like volumes. I mean, like this. So it's a lot of work. It's a lot of man hours to put this all together. And then once that's been submitted, you got to monitor that through the process. And so bringing that through the process, and you've got teams of lawyers and teams of environmental professionals sort of running that whole thing. So and for years.
Mm-hmm.
And for years. Yeah. For years. Yeah. I mean, we're right now, I mean, we have some of the permitting under our belt already. We were in it. We sort of pulled back to work on the tailings facility. We're going to go back in here. We expect that it sort of from now, it's about 4 years. So a year to get the application in front of the regulators, and then 3 years through that process.
Wow. I mean, the reason I'm surprised is that we've actually just submitted an ESIA, but our project's a lot smaller. It's a lot smaller. The total area is 270 hectares, 275 hectares. That's including the pit, all the tailings, all the access roads, all the warehouses, everything. It's your pit is probably several times that size, isn't it?
Yeah, our pit is sort of 2 kilometers by 2 kilometers for the phase.
Yeah. Okay, there we go.
Yeah.
So 4 years to get permitted, roughly, as a guideline.
Yeah, and so I mean, if you look at our history, we've spent, depending on how you want to add it up, we've probably spent 2 or 3 years already working through a number of issues. So we were in the permitting process. As I said, pulled back to sort of work particularly on the tailings. But we sorted out a few things. We sorted out the access road and concerns around the access road. Not going to say that they're going to come back. The tailings facility is a big thing. I mean, as you're fully aware, tailings facilities are rightly get a lot of scrutiny in modern regulatory processes. So spent quite a bit of time on that. I mean, to put that in perspective, just sorting that out in terms of meetings and consultants was $1 million.
Yeah, no, I get it. And tailings is such a big issue, and these big copper projects, these big porphyries, just take time. You know, I mean, you've spent 10 years in it already, or 12 years, and you know, you've got another 4 years of permitting and then construction, and it's a 16, 20-year timeline.
Yeah. Well, you know, when I talked to the Rio guys, I talked to them about resolution, right? They've spent, well, combined, $2 billion.
Yeah, and another 4 to go.
Yeah, you know, and they got 4. You know, I mean, and there's no mine, there's no permits.
Yeah.
So we're comparably cheap. Now that's larger than we are, but this sort of gives you an idea that as you get to these larger scale projects, you do get everything's a little more expensive, right? So
well, and it's super deep, and yours is sitting at the surface.
Yeah, exactly.
So, what do we look out for in the next 6 months to 12 months? You know, what's going to be the news flow? If the feasibility is going to come at the end of 2022, what's going to
mid 2022? So the end.
Sorry,
of Q2.
Q2. Okay.
Yeah. So I mean, so we'll have some more drill results that come out. So we're only about about half right now. We will get the feasibility study Q2. We'll have some new met work, so there'll be some met results come out here as well. And you know, let's be honest. I mean, I will be quite surprised if we're not announcing something with Rio Tinto.
Yeah, great. And well, there we go. We'll keep an eye out for that.
That there's a chunk of work that they want to do, and we're getting pretty close to the end of that. Yeah,
Paul, thank you so much. I've learned a huge amount about your company in this brief time. Have I missed anything out? Is there anything else you feel you want to get off your chest in a moment of sharing?
No, I think we did we did a pretty good job of bouncing around and going through it all. I guess the only the one thing that I would say is that, you know, you don't spend a lot of time talking about these soft, you know, the soft things that make a project go, but that's another reason why we're sitting here with as a partner, why I'm saying that we're going to be sitting down probably early next year and you know, negotiating something with them, is that we worked very hard on getting community support, local support, you know, First Nation support on this project. Continue to work on that, but that again, it's an important part of what separates our project from, let's say, any of our competitors in terms of attracting the likes of a super major. And you know, I could talk about that for 20 minutes, but it's one of those things that, you know, this is modern mining. It's important, and it's certainly something that we've worked on and feel pretty proud about.
Yeah, it's a key element to any project, and any partner or suitor will need to feel completely comfortable with those soft issues, because they are soft in terms of recording, as in you can't present a set of numbers to them, but my goodness, they're hard in terms of operating.
Yes, absolutely.
Good. Well, thank you very much. I look forward to seeing the news in the months ahead, and hopefully we'll meet one day around the traps, or perhaps again over the camera.
Yeah, that would be great. It's been a real pleasure.
Thank you so much.